let's start with Robinhood. They had a presentation yesterday announcing a new venture fund. Hamid, do you want to go over the
Yeah.
announcement
So
and what it means?
so yeah, the Robinhood announcement about being able to open up private company investments to the masses is, I think, a super exciting one because here's what happens. Um, in order to invest in a private company, you basically have to currently be an accredited investor, which basically means you have to be a multimillionaire, have pretty substantial income in order to have the opportunity to invest in early stage companies. And in some cases, even late stage companies like OpenAI is no longer an early stage company, or SpaceX is not an early stage company, but the masses cannot invest in those companies directly, largely because there's a bunch of regulations that sort of limit the number of investors a private company can have, but also to protect the masses, there's laws that prevent people who supposedly are not financially savvy to be able to invest in these companies without knowing them. So it's intended to be public protection, but it turns out that like you're basically keeping the masses away from being able to invest in something that might be fast growing and exciting, right? So you
Right. There's
can,
an element of like, this is how the rich stays rich.
yeah. So that's one way to look at it. Another way is to that like you're protecting innocence because 95% of startups basically fail. So you don't want the masses to be losing their money. Either way that you look at it, I think that it doesn't solve the problem by just saying only the rich can invest in this, right? Because even the rich can like lose their money, and they don't necessarily have great track records. Um, but anyway, the laws are what they are, and what Robinhood is doing here is raising a fund. In this case, they're raising their first fund to be about $1 billion that they're going to invest in private companies. And in fact, they've already invested a few hundred million. So they've seeded the fund either themselves, or I'm not exactly sure where the existing funds came from. But they're having the fund itself become a publicly traded company or a publicly traded entity. So the fund is going to be to have its IPO at $25 per share, and you can invest in that fund by buying those shares. And they're essentially the IPO is going to give them the remaining capital of several $100 million, where they're going to invest in new private companies. And what this does is it makes uh, it's basically essentially the same thing as a venture fund that again, rich people can invest in. Usually, these funds have a $250,000 or at least $100,000 minimum. In some cases, the minimums can vary depending on the size of the fund. And then they have what's called a management fee, which is typically 2% annually. So if, let's say, you can imagine a fund that's $1 billion, 2% annually for management fees means it can take $20 million a year just to like operate the costs of the fund, that the people who are analyzing the companies that are investing, all this sort of like office expenses, et cetera, et cetera. And then on top of the 2% annual management fee, they also take 20% of the upside. So if like that $1 billion becomes $2 billion after 5 years or 10 years or whatever, in a typical VC fund, what would happen is the management team would take 20% of the extra $1 billion of upside. So
Mhm.
right off the bat, you shave 20% of the upside. So now 80% of the upside is remaining, 800 million in the $1 billion example, and that is what the fund owners would be able to get. Robinhood is doing away with the carry. That's called the carry that the management team gets for these funds. So it's actually a great deal, even if it was a private fund that had the same rules as any other VC fund. But then the additional fact that they're opening this up for any investor to invest in is pretty fantastic. Now, you might say, well, these guys are not VCs, and are they going to be able to do as well as the typical VC company does, or VC investment firm does? And my guesstimate to that would be that they're going to do even better because of Robinhood's exposure and Vlad in particular, and being in the heart of Silicon Valley, which is where a lot of these companies are often based from. So um, in tech, Silicon Valley is the sort of heart of the tech industry, and most of the startups are in Silicon Valley. And then there's tons of VCs. There's literally hundreds of VCs fighting for finding the best deals possible, and the best companies get to choose which which VCs they want to have as investors in them. So you know, the investors that can give them the most exposure or highest probability of success are the ones that the best companies would choose. And in this case, if you could get Vlad on your side, or if you could get the exposure of Robinhood, where like all these people who are invested in this public fund could see information about what's invested in that fund on Robinhood, which might expose your company to hundreds of thousands or potentially millions of people. It's pretty exciting. And I suspect that Robinhood is going to actually have the best opportunities for investments in these companies. So, all around, this is super exciting just as an investor, right? Like as an investor in private companies. I happen to have multiple funds that I've invested in, and that all is pretty exciting. Then, an additional thing that is I can't tell you how fantastic it is the ability to be able to exit your investment in these private companies at any given time. Because technically, you're invested in a public company that happens to be making these private investments. So you can sell your shares in that public entity at any time. So at $25 per share, which is the starting price, but at any time you can sell them or buy into them. So currently, I have multiple fund investments, and I'm probably never going to do this again. And the reason I'm never going to do it again is because the money I have put aside in these funds is tied up. I cannot access it. I tried to sell a particular fund that is supposedly up multiple hundreds of percents from what my investment money is from roughly 7 or 8 years ago. And I can't even get my original investment back on the secondary market. So I just basically have to wait until these companies, these private companies, have exits and they try to the fund decides to return my money as an investor. So as a private investor in these funds, your money is essentially tied up. So like what's funny is that Vlad and Robinhood sort of like had this event, was it yesterday or the day before, where they
Like
went
yesterday.
over all of these details. And I'm sure that there's a lot of people who are watching that event skeptically and thinking that like, oh, this is probably like they're trying to pull one on them. Absolutely not. This is like the best possible way to invest in private companies. Now, private company investments are not necessarily, the greatest thing, but in terms of like the opportunity for even rich people to invest in these private investment funds, I think it's still better to invest through the Robinhood fund as opposed to directly into some VC funds. So all aspects of it seem very positive. Now, how does this sort of translate to revenue for Robinhood? Well, if Robinhood provides the only access to be able to invest in private company funds and be able to get in and out anytime you want, that's far more attractive than the Morgan Stanley or the Goldman Sachs, who also gives you access to some of these funds, um, or just going directly. I think that Robinhood is going to end up getting more accounts and larger accounts as a result of all of this. So, um, my speculation is that this is a fantastic thing. It's just another example of Robinhood innovating and just kicking butt in product introductions and really being there for their customers and lowering the fees on all this stuff, which is all fantastic. It's multiple layers of goodness here. So,
Okay. I have a lot of questions for you because you've been on both sides of this where, like you've said, you've invested in VC funds, but you're also you've been a founder in multiple private companies. So let's start with like the dynamics of the fund itself. Because it's publicly traded, there's a good chance it ends up trading significantly above its NAV or net asset value. What are
yes.
your thoughts on that?
Well, the good thing is that the marketplace can actually help determine what the NAV is, right? So there's sort of like what's interesting is that in the private sector, the asset value is actually very, very subjective, meaning like how much is SpaceX worth? Well, the public is not sort of like deciding this in sales and purchases of the stock, but rather, you know, some very few people combined with Elon's determination whether or not he's willing to accept that valuation for the next raise is what's determining what the asset value of SpaceX is. And generally speaking, it comes down to just like literally a handful of people determining that. Now, and then that asset value gets taken into account for these funds. And let's, you know, in Robinhood's case, let's take a collection of these asset values and say the asset values are $1 billion. And the fund's market cap should be roughly $1 billion if that's the case. Now, the fund, because it's an IPO and it's an open stock, might trade higher, it might trade lower. Well, if it trades higher and you believe that the asset value is not worth more than what it's indicating it is, then you should not be buying the shares at a way higher price. And if it's trading at lower and you think that the asset value is worth it, you should buy the shares, right? So the market will actually help determine a little bit more accurately, possibly, because they might think, well, wait, the asset value of SpaceX is given at 800 billion, but I think SpaceX is worth at least twice that. So I think that the fund should be worth more, and I'm going to buy it at this price, and it might cause the fund's price to go up. There is some sort of market discoverability there that might make the market cap of the fund actually a more accurate indication of what the asset value is, as opposed to whatever arbitrary values they have chosen for the various different companies. So when you sort of put this stuff in front of the masses, it could go in any of those directions, but the idea is that the market efficiency will figure it out.
If you were the founder of one of these private companies in the fund, what are the pros and cons? And you've hit on the pros a little bit, but what are the pros and cons of having your company in this fund?
Well, I think that the biggest pro is the exposure that you can get, right? And there might be also additional pros, because a lot of times these funds, just in the VC world, for example, if they have a particular set of investments, they're often bringing their companies together, having meetings and receptions and meets and greets for these various different CEOs and sometimes the secondary management layers of these companies. So there's opportunities to meet the other companies that are in the fund. So I think that aspect of it, we should probably speculate is probably going to be on par with any other VC, or I should say some of the top tier VCs, because that's the way I would consider it. Like if you're getting money from Andreessen Horowitz versus the Robinhood, private investment fund, that's probably on par. In fact, Andreessen Horowitz might have better systems in place for helping their founders or whatever. But for companies that are further along, they might not care about that as much. It might be all about the money. It might be about the exposure that you might have to the public, or to the potentially thousands of people who might see their name in front of people. Like Robinhood's announcement put Databricks' name as in front of tens of thousands, potentially hundreds of thousands of people who may have never heard of Databricks before, right? So now they're probably looking at Databricks and evaluating whether or not Databricks is a company that they might be able to use their software. So it might actually have given them some additional exposure from a customer perspective. So there's definitely some benefits. I don't know if there's any drawbacks, honestly. I don't see any drawbacks for the companies taking the money.
And I know you said you don't think you're going to invest in any VC funds going forward. Would you invest in this Robinhood fund or a fund like
Yeah.
it?
Absolutely. In fact, I already signed up to invest in the IPO. So, the thought there is that in the worst case scenario, I can just sell it. It's not like I'm committed anymore for 10 years. Whereas your horizon for investing in these funds oftentimes is 10 years or longer, meaning you don't have access to your money for 10 years, which is, the more you understand like the limitations of these funds, and oftentimes their performance is not even better than the S&P 500. Um, you realize that, okay, maybe it's probably a good thing that the public hasn't had access to them, right? But on occasion, some of the funds will do amazingly well. So
So overall, I thought the announcement was great. The only thing that gave me a bit of pause was I thought Robinhood already solved this issue, the issue of not being able to invest in private companies a couple months ago when they announced that they were going to tokenize shares and they gave away shares of tokenized SpaceX and OpenAI, I think.
yeah,
And I felt like that solution was better because it was more a la carte, where you could pick exactly which company you want to invest in. Now, I don't
yeah,
know how that works with like the accredited investor rules and regulations. Like if you're allowed to, even though it's a token, if you're allowed to actually buy that or not. But that seemed more interesting to me than it forcing the investor into a whole fund. What are your
yeah.
thoughts on that?
So Robinhood is trying to push the envelope on the edges of what is um, deemed sort of like normal or acceptable, right? So this
Yeah.
tokenization of, I think they did OpenAI and SpaceX in particular, was something that they have private investments into into OpenAI and SpaceX, and what they did is they tokenized their own investments and sold those as sort of tokens where it gives exposure to their investments to a potential buyer of the tokens. Um, Kind of complicated. And immediately Sam Altman commented about like being extra careful that like this is not actually buying shares in our company, and our, like that's not something that anybody can do. So he kind of made it clear that he was not on board with what Robinhood was
Yeah.
doing there. And I think that they may have backed away from that. I'm not actually 100% sure if they have or not publicly, but you kind of want the companies to be on board with this tokenization thing, and the regulators to also be on board. So um, there's definitely higher risk, and I don't think that that's going to come about as easily as a collection of investments, which you can then sell that the company that is making that collection of investments as its own entity that you're investing in. So this might be a way to get around the regulations, essentially.